You're going to hear about different types of investments. Things like individual stocks or bonds, mutual funds, exchange-traded funds, REITs, I don't know, maybe even limited partnerships. They're all a little different, so it makes sense to have a bit of an understanding of what these are and how they work. So let's start at the beginning. What's an individual stock or bond? This one is pretty straightforward and something that we covered in an earlier lesson. An individual stock is a stock in a single company. For example, shares of Apple, or shares of Ford, or shares of Coca-Cola. If you own 100 shares of Nike, you own, well, 100 shares of Nike. That's it. You have 100 shares of an individual company. And in this example, it's shares of the company Nike. Same thing is true of individual bonds. You can buy individual bonds for Nike, or Home Depot, or Chevron as well. Individual stocks or bonds are just single investments into a single, that's why it's called individual, company. But let's build on that. A long time ago, like 1,000 years or so. No? No. It's actually about 100 years ago. That's still a long time. Anyway, someone came up with a different type of investment. Not a new asset class like, hey, let's invest in dandelions. No, they came up with a new way to invest. They created something called a mutual fund, and they are really popular even today. As an investor, you will almost certainly invest in a mutual fund if you don't already. All right, enough. So what's a mutual fund? These are all individual stocks, but this is a basket. This is a mutual fund. Instead of investing in a single individual investment like a stock or a bond, a mutual fund invests in a whole basket of them. When you buy a mutual fund, you're buying the whole enchilada, which means you own a piece of each of the investments in the basket. It's like those straight from the farm vegetable boxes you can buy. I did that once. Yeah, just once. I opened the box and I didn't even recognize half of the vegetables in it. Carrots I knew, corn I recognized. I think I saw a couple of tomatoes. But the other stuff, who knows? It's too bad though. I bought the box. I can't pick and choose only the vegetables that I want. I get all of them. Same is true with the mutual fund. You get everything. And here is something many investors don't realize. A mutual fund is just the basket. It is the device or the structure that holds the stuff. So don't assume that if you own a mutual fund, the basket is filled with stocks. It may be, but it could be filled with bonds instead, or maybe a mixture of stocks and bonds, maybe some real estate. Again, the mutual fund is just the basket only. It tells you that this mutual fund you have owns some other things, but it doesn't tell you what those things are. All right, does that make sense? Any questions? No? All right, sweet.